So, all right, folks, this Bitcoin fact changes everything. And when I say it changes everything, I'm not talking about like a little bit of a difference. I'm not talking about a minor differential. Okay. This is not just big, this is huge. Like really big, really gigantic. You may have noticed, especially if you read news about the Bitcoin market or whatever, which frankly, as a trader and an investor, is best to ignore. But as somebody just involved in the asset class, it's generally good to know for developments, technology information, anything about regulation stuff, whatever, just to know what's happening, generally speaking, in the ecosystem, right? So you might have noticed in the past couple of weeks or months that there's been a lot of increased talk about these ETFs, right? The Bitcoin ETFs, the ones that were approved in January by the SEC, and about a dozen or so, 10, 11, whatever it was, US based Bitcoin ETFs went online, and there have been significant inflows into the market, right? And last week we got news, of course, about the ETH ETF being approved in the US as well. Now, why does it matter that it's US based? Well, obviously it matters that it's US based because that is the biggest market for anything involving trading and investing. Right? It's the US market. And that's why for so many years people have been pushing to get Bitcoin ETFs approved and Ethereum ETFs approved. And now that they're approved, it's kind of off to the races in terms of, people buying what's left of Bitcoin to buy and buying as much Ethereum as they can get their hands on, right? Well, turns out, if you look at the ETFs that have been doing the buying of the Bitcoin since they launched at the beginning of January, that effectively we are now in a situation, and I've been telling you guys this was going to happen for freaking years, okay? I remember talking about this, in the end of 2017, even saying, when margin trading was made available to institutions, it was going to be, an opportunity to short. Sure enough, the market shorted at the 20K high on the day that was approved. And as that year passed on, and the next year started to pass through, and people were talking about, murmurs of a Bitcoin ETF, and they wanted to see if they could get it done in 2018 or 2019 or 2020, and it never happened, right? And it just kept getting pushed back and pushed back. Eventually, it happened in 2024. And for years, I've been telling you that the accumulation that is happening at a scale that is hard for the average person who isn't yet into Bitcoin to even comprehend. Okay? Let's put it this way. At this point in time, about 19.7 million Bitcoin have been mined out of a possible 21 million that will ever be mined. The remaining 1.3 million are going to be mined over the next roughly 116 years. Think about that, right? That means that for the next 116 years, only 1.3 million are left to be mined, which if you break that down per year, including all the halvings and everything else, right, is going to drop in another 4 years of the next halving to half of 3.25 or 3.125, whatever. And then 4 years after that, it's going to be less than 1 Bitcoin per block. So, and the number keeps, getting cut in half every 4 years. So that 1.5 million Bitcoin that's left is already much less than 10%. There's 1.3 million left to be mined, tops. And that 1.3 million is far less than the amount that are already known to be lost / irrecoverable, inaccessible, because people lost their keys, etc., especially during the earlier years. So all of the Bitcoin that is currently being mined is already being bought on a daily basis and then some, meaning there are more Bitcoin being purchased every day than there are being created. Meaning any new Bitcoin that hits the market is pretty much instantly bought up by huge wallets, okay? Huge companies. We're talking BlackRock, Fidelity, all these huge banks, right? Huge banks and wealth management companies, you name it. They're buying as much as they can get. Their clients are buying as much as they can get every day. And that's just in the US. Now consider there's places like Hong Kong where they have their own Bitcoin ETF, which is roughly, and on the day it launched, it was like roughly 10% or something of the daily intake of the US based ones, or that was their goal or whatever. So much smaller, yes, but still significant. Talking about companies like Grayscale that have more than 220,000, I think it's 228,000 Bitcoin that we know of, right? And this isn't even including the wallets that some of the larger managers of these firms have, or that the companies bought directly over the counter, off the record, not impacting, their books officially because they hold it privately on private wallets and nobody even knows about it. I've been saying from a long, long time, okay, because everybody's talking for years about how Bitcoin is the people's money, blah, blah, blah. Okay, Bitcoin is not the people's money at this point. Is it still an incredible asset? Yes. Is it still worth, if you have some, holding on to it for the long term? In my opinion, and just my opinion, don't do what I say, do what you do. But yeah, it's definitely worth it, right? Even if you only hold a tiny fraction of a coin, you're better off, far better off, in my opinion, than people who don't hold any. For people who don't hold any, right? There's only 1.3 million of these suckers left to be mined. And every day, all of them that are being mined are being held by the miners. And the ones that they're actually selling, which is not all of them, they're only selling them because they got to pay for the upkeep of their servers, electricity, security, warehousing, etc. Right? Of the ones that are being sold, every single last one of them is being bought, and many more. Who are they buying them from? Well, they're buying them from exchanges who have stacks and who are happy to take profits at the current market prices. And they're buying them from traders, retail traders who hold a bunch, whales who hold a bunch, whatever, who don't mind parting ways at this price for whatever reason. So obviously some people think, yeah, this is a good time to sell. Sure, and it might be. Again, if you trade the VEPs, you know what the probabilities are, up, down, and sideways. If you're an investor and you look at the long arc of Bitcoin, you got to think to yourself, what is risk management? Okay? On the one hand, yes, it's gone up many hundreds of millions or billions of percent, depending on where you calculate it from, in 15 years. What are the odds it's going to go up billions of percent more? It's probably not going to go up billions of percent more. Okay, but could it go up to $1 million Bitcoin at some point? It is entirely possible that in 5 years to 10 years, we will see that happen. So if a percent of it now costs $700, what do you know, and a percent of it in 5-10 years costs $10,000, you tell me, is that a good investment? Especially when what it is, what it very well could be, is the future standard of value exchanges, right? Of money, of currency, of energy. Is it worth it to you to own a piece of the future of that? I'm not telling you to. I'm really not telling you to buy. By the way, there's plenty of other cryptos. If you just want to mess around with cryptos or whatever, or you're really into some other projects, hey, enjoy. I'm talking about the big gorilla, and more importantly, what it means for the market. I don't care if you buy it or not. Okay. Frankly, I've been telling you guys for so long to what I think, and that I think it's worth holding. That if you haven't by now, I mean, honestly, good luck to you. I'm not saying you missed the party, but you're sure coming in late in many respects. It's not very late. There's still time for those who want. But if you've been listening to me talk about Bitcoin for years, or frankly, if you've been listening to anybody who knows what they're talking about crypto or Bitcoin for years, and you've just been ignoring it the whole time, and you haven't seen it fit to take action, I don't really know what to tell you at this point. I'm talking now to those of us who are already in the party. Okay, more than anything. And if you're watching this and you're out of the party, pity patter. Well, you can still do things to get some. You can learn how to trade, and you can get some, right? But if you're thinking of getting into this, and you're not a trader, and you want to invest, that's on you. I'm talking about the rest of us who already have some. Okay? You can even have 0.005 Bitcoin, like 0.5%. You're still going to be glad, right? And maybe if you just keep accumulating, $10 a week, $20 a week, $100 a week, whatever it is, $500, whatever you can afford to just, put in and forget about it. Just invest into it. It's your call. It's up to you. I'm not recommending that you do that, like, at all. Seriously, at all. Especially not if you have like other things to do and you can't afford it, right? Like, investment money is not money that you need to pay your bills with, right? You need to pay your bills first, then you can invest. If you can't pay your bills, you really can't invest. Or if you do, it's extremely unlikely that you'll succeed, and you'll probably have a very painful experience. So take care of your bills first. And if some bad things happen, which happens to everybody, right? I certainly had bad things happen to me, and I expect more bad things will happen in life. That's how it goes sometimes. Then you got to take care of those things, even if that means interrupting your plans or changing them entirely, possibly even losing everything. Sometimes those things happen, right? Look at Michael Saylor. He made billions of dollars and then lost it all overnight, and then took decades to make it all back. And he did it essentially in the last few years by investing huge amounts in Bitcoin, and it paid off immensely for him. Right? at the same token, the rate of returns that he got from investing 4 years ago into BTC was the same exact rate of returns that anybody else would have or has from their purchase of BTC at that same time, right? So if you bought when he bought in the lows 4 years ago and held on to that, well, that Bitcoin until now has the same rate of return as the Bitcoin that he's holding on to that he's bought then. Maybe he bought more, but you have the same rate of return, right? You probably 10x what you were buying if you bought around 6K, 7K, 8K, whatever, right? So your rate of return is significant if you just bought and held. But think about the huge impact this has, this Bitcoin ETF thing. Not in terms of, oh, people are going to rush in and buy and the price is going to go to the moon right away. That's not what it's about. If you're expecting Bitcoin to make you rich overnight, you missed that boat 15 years ago, 10 years ago, right? 7 years ago. You missed that, or 8 years ago. You missed that boat. After the beginning of 2016, to be honest, after the beginning of 2016, when that price started just climbing up, it was really climbing up in 2015, but let's just say beginning of 2016. Right? Once that bull run, or call it that, happened, right, from 2016 to the end of 2017, that 18-month period or so, middle of 2016 to end of 2017, that was really the final bull run to quote unquote get rich overnight in Bitcoin. If you want to talk about the average retail investor, average retail trader, yeah, that was when you could just go crazy, make 2,000% returns very quickly, and be done. Right? If you missed that, you missed it. But if you're holding on to Biddy right now, if you have your little stash of Bitcoin, it can still put you leagues above where other people will be. By the way, $1 million, right, dollars in 5-10 years obviously won't have the same purchasing power that $1 million has today. But it'll still be worth about what $500,000 is worth today. So if you have, say, $700 worth of Bitcoin right now, and that turns into 10 grand in 5 years, it'll be worth about maybe 6 grand worth or 7 grand worth of purchasing power today. That's like a 10x purchasing power holding on to 1% of Bitcoin. Right? Again, and that's because the dollar keeps the value. So assuming the dollar will be around another 5-10 years, it's a big assumption, but it's an assumption. If Bitcoin goes to $1 million and the purchasing power of the dollar falls, by half again or more, let's just say half. Okay. And you happen to have a Bitcoin, that's a $500,000 worth of purchasing power. Whereas right now it's around 70K worth of purchasing power. That's a pretty significant increase. It isn't to say it's, nothing else can outperform it in the next 5 to 10 years. There's going to be lots of things that are going to outperform it in the next 5 to 10 years. Lots of meme coins or other coins or other cryptos are going to skyrocket. And they will achieve insane prices. And if you got in low enough, you'll make insane returns. But Bitcoin is the big gorilla. And why does it matter? It matters because it's the first one that all the big institutionals are going for, right? Think about it. 11 ETFs just in the US have nearly 1 million Bitcoin right now. 11. Where do you think they're going to be in another year? We're only 4 months into this thing. 5 if May is completed. I guess we're a few days away. Right, so we're 5 months into this, and they bought like 500,000 or something in the first 5 months, even more. And if you add up all the other Bitcoin they have, it's close to 1 million. But let's just say it's a half. Where do you think they're going to be in another year? Right? They're probably going to be well over 1 million Bitcoins in the ETFs. They're probably going to have, all in all, including ETFs and non-ETF, more than 2 million, which will be like at that point basically 10% of all of the potential supply, and far more than 2% of the actual supply, because again, rough estimate, 4 million have been lost, gone forever. It's 1 in 5. That's 20% of the market gone forever. So there's really only 80% of the available, of the circulating amount that's actually circulating, and most of it is being held and not circulating. It's just being held. So whatever price action is happening among a dwindling supply that is very quickly dwindling as more and more banks and whales want some. Do you remember when I told you years ago, what would you do if every millionaire wanted a Bitcoin and realized they can't have one? Right? What do you think would happen if every millionaire on Earth decides, you know what, I should have a Bitcoin? Why not? I'll buy one. And the odds are they won't just buy just one if they can get any. Right? They're millionaires, and they want to, they have many millions, or even just 1 million, and they decide they want to buy one for less than 100 grand. They can still get in. What happens when the price spikes to 200 grand, 300 grand? It's going to significantly limit the number of quote unquote millionaires who can actually buy one, because they're not going to spend that much of their wealth on it because they're averse to risk at some point. They don't want to lose their millions. And if it goes down, oh no, God forbid. But even if you just consider the ones who can actually afford it, there's far more than 21 million millionaires who can actually buy a Bitcoin. And there's only 21 million Bitcoin, and only a couple million of them are even available for purchase at this point, at most. What do you think is going to happen to the price when you have that much demand and such a dwindling supply? So yeah, put that in your Bitcoin pipe and smoke it. Happy trading. Happy Bitcoining.